Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is, Tuesday, September 12th, 2006. And I don't think there's any doubt who's in control of this market any longer. Yesterday I said it looked like we did have a successful test of the 20-day moving average. And today we saw continued follow through from there. So the volume wasn't quite as big as yesterday, but you know what? That's irrelevant. Fact is, the market was up significantly, and if you were long, you made good money. Whether you made good money on big volume or light volume compared to yesterday does not matter one bit at all. So let's take a look at these cues. We've got them. Looks like they're honing in on this target that we've had at the 200-day moving average, right at about 40.25. Looks like that is really within distance now, and the market, like I said, like I have been saying for the last couple of weeks, is doing exactly what a bull market is supposed to do. And it's a bull market because we've got the short-term moving average above the intermediate term, above the longer term, and they're all advancing. Now that's on this time frame. Early on in the uptrend, we get support at the short-term moving average. The pullbacks get a little bit deeper. It's the intermediate-term moving average that tends to act as support. It doesn't mean we buy there. It means that's an inflection point. It's where we want to look to buy, and then we look for evidence on the shorter-term time frames, like we saw yesterday on the 10-minute time frame as the market recaptured the 5-day moving average, and it pulled back to that and held support yesterday. Today we saw continued follow through, a nice early morning surge followed by a midday pause and another surge right into the close. So a very strong day for the market. The only doubt that I was having about the overall market was coming from the IWM and the MDY, and we can see that looks like a bad print there. Let's just focus on the MDY because that's the IWM. The MDY, the mid-cap spiders trust, did make it back up above this trend line. That's a very good thing. And we were also looking at the 5-day moving average in there, which is 136. Now it's back above that. It's above the 10-day moving average. You see, that's where we saw that initial support. Short term, the market's a little bit overbought. Maybe it's going to have to consolidate some of those gains, but the point is the market is in an uptrend, and it's been being led by the semiconductors. The semiconductors are the group that a lot of people love to hate, but the fact of the matter is, since they broke out a couple weeks ago, they pulled back to the rising 10-day moving average, then the 20. Gave us a little bit of concern because it was back below this 3350 level. But yesterday we saw that 3350 level recaptured, and we saw a nice resurgence in volume here once again today. And it looks like this market is also headed for its 200-day moving average, now at about 35.45. What happens when it gets there? Who knows? Anyone's guess. It's a potential level of resistance. It doesn't mean it is resistance. It means, that's where there tends to be sellers found. That's where they congregate. So, a lot of times, why does a moving average act as support or resistance? Well, it's an area where demand slows down and supply starts to pick up. So it tends to become rather a level of resistance a lot of times when you've had a rally up to that level. So the semiconductors look like they're headed for a test of that level. We see confirmation of this bullish trend that we've been looking at. We did have another higher high today, which was preceded by these higher lows. And ever since it got back above that rising 50-day moving average, and then we saw the 50-day moving average start to rise. We had the 10 above the 20 above the 50. The market's been in great shape. So the SPY, S&P 500, also continues to act very strong. Looks like it's headed for its price objective up near 133, 133 and a half. That's the level we've been looking at for at least 2 months now, based on this inverted head and shoulders pattern. So again, it's important to remember that you have to listen to the message of the market. 2 weeks ago, they told us that the junior traders were at the desk and nothing much should happen. We had a great rally. Last week, we were told now the senior traders are back. They're going to take control of this market. What happened? The market did a whole bunch of nothing. This week they're telling us, well, September's the worst month of the year to trade. It's historically the worst month. As far as historical tendencies go, that's all they are, is a tendency. They shouldn't be ignored, but they're definitely not a reason to buy or sell. It's more like an interesting curiosity at best. It just represents one variable in the market, and the market's got a very dynamic market environment. What we have to do is we have to learn to recognize that the market continually adjusts for new information that's given during similar periods each year, and that's why we do tend to see similar seasonal tendencies, but they're tendencies at best. They don't pay the bills. Neither does volume, neither does moving averages or anything else. The only thing that pays us in the market is price, and that's why you have to focus your attention on price. The SPY got back above its 5-day moving average today and made a nice run for these prior highs over here. You're going to see a lot of people saying, "Well, we've got gap resistance." I think gaps, tend to get filled, and this was just a small profit-taking gap. Nothing to be concerned about. So we've got a market that's in a great uptrend. It's a little extended here short term, but we now have confirmation from the markets that were the MDY that was giving us the most reason for concern. If you remember, I started out the week thinking that the biggest areas of concern were the MDY, and I also thought that Google, looked like it had the potential to break down hard. Now, what I should have done is bought calls on that. Fortunately, I didn't buy calls or puts, rather. But it seems like they bring Google down a lot of times right to the edge of death and then rocket it higher. I'm sure there's a lot of pain being felt in that stock from short sellers who've been caught on the wrong side. Point is, the market has turned around nicely, and that's where you're going to have to. That's where you're going to find your best opportunities. Opportunities like Bebe, symbol BEBE. We got involved in this one yesterday at 21.45, right in here. I suggested raising your stop to a break even. At this point, I would say that your stop, you can raise it to just under $22 a share for symbol BEBE. ENZN, we were also in yesterday at $8.21, and that occurred right over here, right near the open, 821. I had suggested in there to raise your stop to a break even, and I'd say it's time to raise that stop once again. Let's put that stop at 828, just below this level right here, and ENZN still looks like it can head for maybe about $9 a share or so for that stock. ARNA, I had mentioned last night, as a potential opportunity to trade on the long side. What we wanted to do was buy it above 1150. It gapped up above that level, so officially there's no trade. And looking at this stock early on, you can see it had a massive rally here that quickly failed and trapped a lot of people in. I don't really care for that type of action. That you get people all excited all at once and then it completely falls apart. If you captured part of that trade, congratulations. Otherwise, I would say if you're in it, wherever you're in, you're on your own here, but I would say break even, stop if you are involved, because officially there was no entry based on the parameters I laid out. Same goes for ATRS. ATRS, we were looking for a little bit further pullback and then to buy some strength. That didn't occur, so there was no reason to be involved there. And hey, you know what? It's easy to say, oh, I should have just bought it because the market was up so much. But it's easy to say that. You never know what the market's going to do until after the fact. Wet Seal, we wanted to buy that stock, WTSLA, above 570, and it was acting good right up till the end of the day. We saw the stock come down and tag our stop of 562. So that was stopped out for a small loss. I kind of expected this stock to do a little bit better because it was it's a retail stock. At least I think it's a retail stock, and they had a strong day overall. AZPN, here was a company I would recommend it on the short side. What we were looking for first on this stock was a rally up to $10.90, and then once it attained that $10.90 level, to then look for a failure and to sell it short on weakness below 10.75. Well, that weakness never occurred, so there was no real good reason to get involved in AZPN. If you got involved, it was an undisciplined trade, and we all have those from time to time, but there's no reason to be involved here, so no trade taken. Cephalon, however, did give us a reason to be involved by taking out the lows here, $56.47, which was where I suggested selling the stock short. If you were in it, it made a quick rally, a quick drop rather, and that drop came down to daily S1, and then at that point it overtook the daily VWAP. Once it overtook that daily VWAP, our stop then was at 56.82, so that was right over in here, and that seemed to be a good place to put the stop. But we did get stopped out for that one for a loss of about 35 cents. While I'm talking about the VWAP, it's also interesting to see that on the Qs, for instance, that, we started out and held above that daily VWAP all day long. We had a test right in here, and then the market rallied from there and continued to be strong. And look at the volume. Where does the volume come in? It comes in on the way up, followed by low volume consolidations. This market is doing exactly what it's supposed to do when it's in a bull market, which is what we have here. Now, yesterday I outlined a little bit of reason for some concern based on the weekly time frame. I still think that's the picture. However, until we get a reason to sell based on the action on the daily time frame, we have to just keep that in mind, but remember that this is the trend that we're trading here, and that's the one that's going to pay our bills, not the trends of the weekly time frame, unless you're investing. And if you're investing, I tell you that you're probably on the wrong blog here, because I'm not an investor, I'm a trader, and my goal is to bring you good market commentary and ideas that can help you make money as well. If you're interested in more information about how I look at the market and how to learn to do this yourself rather than having it spoon-fed to you each day, I am conducting a class on Friday at marketwise.com. If you sign up for that online course, use the code ALPHA1, ALPHA numeral 1, and that will give you $60 off the price of that course. I'm conducting it Friday because it's options expiration day, and I typically find that if I trade on those days, I regret trading it. So here's a good way to keep myself busy, and hopefully I'll see some of you there. So thanks for your time, and I'll be back this evening with another video.